My name is Fraser Howie. I'm an independent analyst on China and author of a number of books on the Chinese financial system, in particular Red Capitalism, and then before that, Privatizing China. So I've been in Asia for about 25 years, primarily working in the financial sector, Hong Kong, Beijing, Hong Kong again, and now I'm based in Singapore, but always with a big focus on China in terms of my day job, but also my writing and commentary. It was actually myself and a co-author and a colleague at a company called CICC, which was the first Sino joint venture securities company set up in China. About 15 years ago, we started writing about the Chinese financial system, simply because we saw what was being written about China back then. This was in the late 90s, 2000 or so, and frankly, we thought it was nonsense. We were on the ground in China. We saw what the securities markets were like. We saw what the stock market was like. And it was clear that the pundits in Hong Kong were just far too optimistic about what China was. And we thought, there's a story to tell. That got us writing. It was actually on the back of a report we wrote for the CICC at the time. And we wrote Privatizing China, which was basically a look at what was then about 15 years of the stock markets in China. And really just going right back to basics, really the late 70s when reform started in China, the first share issuance in 79. And then the development of OTC trading through the 80s, listings, etc. And they say that was privatizing China. But then, as the knots progressed, we realized that we had more to say, and in particular in the banking sector, because if you remember, go back to that time when we were writing Privatizing China and writing on the stock markets, the Chinese banking system was basically bankrupt. In 1999, Zhu Rongji, the premier at the time, started a big bailout program where they set up bad banks, asset management companies in China. And we saw that happening real time as well, but it was a very long process. And so by 2005, 2006, you started seeing these, what were just previously bankrupt banks being listed, raising multi-billions of dollars. And we thought, but this is nonsense. These are Chinese banks. These aren't Western banks, and they aren't banks in the way we understand them in the West, and we thought there's a story there. So that was the sort of the genesis of Red Capitalism. And in Red Capitalism, which was eventually published in late 2010, beginning of 2011, we went through that history of how banks were reformed in China, how you took a bankrupt banking system and you made it into, what was at the time, basically the world's most expensive banks. Valuation, I think it was something like $250 billion, $250 billion were all the Chinese banks. Just an incredible figure remembering that a decade earlier this system was bankrupt. So that was the genesis of Red Capitalism. Interestingly, the bulls thought it supported their case, the bears thought it supported their case. We didn't write it with any case in mind. We wanted to tell a story because we felt that, again, so much of the hype, so much of the headline in China is superficial. And understanding China, you've got to get away from the facade, the face of China. China is great at telling a story about how it sees itself. And a lot of people buy into that because China can be a very opaque and difficult place. But especially in the stock markets and in the capital markets in general, that almost certainly what it says in the tin isn't what's in the tin. And so therefore it's important to understand the background to these things, to understand the accountancy behind it, and the chicanery, quite frankly, in a lot of the financial system. I think it's really important, if you want to understand where we are in China now, it's what I call sort of the Olympic cycles. If you look back to the 2008 Beijing Olympics, I would still maintain, although the economy was, probably less than half the size it notionally is now, I would say that's the modern high point of China, frankly. That if you look before, that Beijing Olympics, they put on this incredible show. They built so many subway lines. They did so many things which no other country allegedly could do. There was it was a great catalyst for building across the country. The economy was booming. Everything seemed to be going. Everyone was pandering to China. And I think that really was a high point. Of course, that was August in 2008. And then, of course, global financial crisis hit, and we all remember, or maybe we don't remember now, but that last quarter of 2008 really was dreadful. Things literally just fell off a cliff in that last quarter. And that was very important in China's case as well, because China was hugely affected by that. I think everyone, of course, remembers the output or the response to 2008 by the Chinese government of this huge stimulus program, which started off a whole series of events which we'll come to. But I think, remember, that before that, and the real reason for that was not simply to keep global growth going, but China had, the headlines, 20, 30 million people unemployed, these migrant workers who, this was the mainstay of the Chinese economy, that this migrant population was working in the factories along the coast, and that the downturn in exports, the downturn in the global economy really impacted China. And so what you saw there, and this again was absolutely central to why we wanted to tell the bank story, was because the response there, this stimulus, was basically you turn on the credit taps. That after spending the best part of a decade trying to reform the banking system, trying to make it into something that was something at least approaching a market-based system where there was some degree of risk control, some oversight, you basically had the rulers in Beijing reverting to their old practice of using the banks as a piggy bank to basically fund growth. And so you turned on these credit taps, and literally any warm body could get money in 2009. And so you had this huge expansion of credit. And of course, you saw, guess what? A big rebound in growth, which should not surprise anybody. Growth is an output, not an input into these models. And so you had this huge expansion of credit. But I think that was the start of something that has taken China, as I say, before those Olympics, before that last quarter of 2008, China was a growth story. There was no question about it. It had been 20 years by then of double-digit growth, and this was, China could continue to grow for another 2 decades, 3 decades, whatever it may be. And yet, that was a real turning point because China's gone from a debt story, or from a growth story, to a debt story, which is just staggering. And I think we forget about this because the growth numbers have still remained high. And people say, yes, they've fallen from their highs, but hey, they're still doing 6.5% or 7% if you believe those numbers. But you say, it's still much better than what the West's doing. But that's, like I said, that's incidental because the real story in China now is that the reason you're still getting that growth is because credit is growing at double the rate of GDP growth. And so that 2008, that response, that 2009 stimulus, the early stimulus to keep growth going, really set in motion an addiction to debt and took China. And let's remember, well, there was clearly an impact from the global economy. It wasn't necessarily a crisis per se. And so it's interesting now that you look and you compare Chinese growth numbers and the growth, particularly the buildup of gross debt in the economy, it gets compared to what the US is or what the UK is or what Japan is or Greece or whatever. You can take any of these countries. But these are all countries that have clearly gone through crises. In China's case, sorry, I don't see there's a crisis. Yes, there's slowing growth. There's lots of problems with their economy. There's many areas in China you can look at and say there's real problems. But in terms of actual real fundamental financial crisis, there isn't one. There's no real panic there. There's still a lot of faith in the government. There's still a lot of resources and capacity of the government they can put to work. And so you've had that huge credit build-up in spite of a real problem, which really makes me wonder when I think about future issues, when you think if a crisis does come in China, and given what's happening in the States with the new president, you can certainly see how scenarios where you are going to get crises coming, then will China have the wherewithal and resources? But coming back to that stimulus, okay, so you had a positive response from China in 2009. That obviously was lauded at the time that this would support global growth, support global demand. At the same time, you also had a government who started to acknowledge that there was fundamental imbalances in the economy and that this needed to be reformed. And of course, there was lots of nice words and nice talk about this, how we're going to restructure, we're going to move away from this dependence on fixed asset investment, and we're going to move more towards a consumer sort of driven economy. And here we are 8 years on, an Olympic cycle, 2 Olympic cycles later, and you think, this really is quite horrible. You've effectively had the growth rate halved and the debt double, which hardly is really a successful formula in many ways. I think whether China becomes the world's largest economy is almost frankly irrelevant because that's like just weighing the health or measuring the health of your kids based on their weight. There are many other factors that are far more important to think about than simply, are they simply getting bigger? Are they growing? And I think China has continually failed over this past 8 years or so to really grasp that reform process. And again, this isn't just something from the new leadership. This is something, if you go back to about 5 or 6 years, there was a big report from the World Bank, work done in conjunction with the Chinese government called, I think it was China 2030, about the need to restructure their economy, move away from fixed asset investment. And it laid out a whole series of reforms and steps to try and get to remove this dependency. But guess what? As the global economy has failed to recover, as China's own economy has started to stutter in many ways, there has been a continual dependency on debt. And so what you've seen in China, you've seen incredible innovation, but in the worst possible way. That instead of, whereas at the start of this crisis in 2008, you still had 60% of debt in the economy, or probably higher, certainly a decade more or so ago, you had 80% of debt in China basically being from bank loans. Very simple. You could look at the amount of deposits they had, and you looked at their bank loans, and you control that through a loan-to-deposit ratio. So it was very easy to literally turn the tap on and off. But what you've seen is a proliferation over the past 8 years or so of broadly called shadow banking. And I think that doesn't even come close to describing it because it's such a murky term by definition. But you have had incredible innovation, as it were, of bankers and entrepreneurs and businessmen figuring out ways to get around systems which are put in place by bureaucrats to try and limit credit. And the difficulty is the returns for much of China's business is low, and therefore they're desperately trying to look for new inventive ways. At the same time, as rates have fallen in China, you've also got depositors who are saying, I want better returns. And so you've had this springing up of, and we talked about this when we wrote Privatizing China, this was really just the start of this process of these wealth management products, short-term products, guaranteeing better rates, which got immediate deposits, which weren't necessarily counted under the loan-to-deposit ratio, but again, got around that lending restriction, but got depositors' funds into the hands of those who wanted it. And in some ways, it's a good sign. It's a liberalization of the currency or of the interest rate market, which is obviously a very important thing in China. But effectively, what's happened is that much of that control over the banking system has been lost. And where we had highlighted this at the end of red capitalism, the system now has become so much more complex. Whereas you really could think previously of a dozen banks or so controlling the bulk of the loans, you knew exactly where they were going, and it was very manageable. You now have a highly opaque system of banks, of shadow banks, of wealth management products, of trust funds, of corporate lending, of what's called entrusted loans. It's just loans being siphoned through banks, wealth management products created by securities companies, and then mix into that guarantee companies which have sprouted up to try and guarantee these loans. You have then also things being sold on the internet. You have pawn shops where it's almost endless. And I keep thinking I should write down and try and map this whole system out. And then I thought it's like trying to map the brain. There is almost so many connections and nodes that have appeared. And the difficulty is you don't actually know the connections from one to the other. And so am I double counting this debt? Is this a chain of debt that's growing, or is this new debt? And so you can actually, and I read some reports about estimating the size of debt in China, and I think I've absolutely no idea if that's true or not. These are huge numbers. And again, but there must be some double counting there. Clearly, what you see when you actually speak to entrepreneurs, when you speak to businessmen on the ground, when you speak to banks, there is without question an A lending to B lending to C lending to D, and this chain and this node of connections. And then you think this is clearly worrying, and it is worrying. But what no one seems to have any idea about, including myself, is when is too much too much? And this is the real problem. We can talk about this problem, we can talk about this growing problem in China, but frankly, I have no idea when the party stops. And again, you could look back in history, a lot of cases, the Ottomans probably peaked in the 17th century, and they were still going up until the end of the Second World War. Things can go on, bad things can go on for a long time. I think also the greatest comfort that China should take in its current debt situation is that Japan still exists. That, for my 25 years in finance, I started following like many, the Japanese warrant market. And, Japan had problems then. Japan was falling, and people thought, there was even people in the early 90s who thought the Nikkei was going back to 40,000. But it was actually on the way to 7,000. And Japan has largely been in, recession for the best part of 20 years and more. And you think, well, why can't China pull off a similar trick? A different sort of trick. It's clearly not as rich, clearly not as developed. But you ultimately still underpinning so much of this in China, even if you can map this highly complicated system, which you can't, because into that you've got, whether is it local government financing, is it, like I said, the wealth management products, is it the regular bank business, is it rich individuals, is it overseas funding? Okay, so let's say you map it all, but who's actually going to be the person to pull their finger out the dike and let the water fall through? Because in China, there is this continual belief still that the government will underpin everything. And to some extent, as a working model, I think that probably makes sense. And again, anyone who's predicting the collapse of China, first of all, I have no idea what that means. If your debt's doubled and your growth's half, that looks pretty much like a collapse in some ways already. The bullish case in China has now become it's not collapsing, which is a big turnaround from where we were 5 or 6 years ago. So even if you can map all that, I still think, but you've got to look at the politics here as well. You've got to look at the mindset, the control of information. So someone goes bankrupt. Why should I care about someone else's bankruptcy? My wealth management paid back. Wealth management products, very difficult to get someone out on the street protesting or really causing a stink for someone else's misfortune. And so therefore I think, how does this really become a systemic crisis? And it's not clear to me that it does. Telling me the numbers are getting bigger still doesn't tell me how you get a systemic crisis. What staggers me is that there are so many people, again, clever people, lots of smart people, and whether it could be economists, hedge fund managers, whatever, lots of smart people who'll go on TV and talk about the economics of the debt issues, etc. And I think, can't really argue with any of that. I'm not a trained economist. Maybe you're right, maybe you're wrong, who knows. But what does stagger me is that there is often a willingness or a willful blindness on the politics of it. And I think nothing in China, you simply cannot divorce economics from politics in China. And certainly if you're worried about debt situations, and I'm talking big picture, so if you're looking at the stability of the banking system, if you're talking about the currency, if you're talking about government debt, if you're talking about local government financing vehicles, bank bailouts, however you want to pose it, the politics is absolutely essential. And to think that it's somehow China, I would say, the law of economics works just as well. If they work at all, they work just as well in China as they do outside of China. They don't stop at the border. So in that sense, economics, yes, does work in China. And but at times people think, somehow the Chinese have got their own economics or works differently. And I say, well, that's because you're not accounting for it probably, because much of that other accounting is effectively the politics, and you've got basically the government standing there. And without question, I think that the right view to take, certainly for the moment, is that the government will stand behind. You're certainly going to stand behind the banks. You're not going to get a Lehman Brothers moment. One of the big banks, one of the big top, I think they technically have 4 and then 7 what they call systemically important banks in China. So none of those big banks are going under. Smaller rural banks, yeah, that's possible, but they'll be merged in something else. But politics and political support is absolutely essential. And to ignore that, you do so at your peril. I think the trouble there is, though, I think it was Churchill said about Chinese politics, it's like 2 dogs fighting under a carpet. You've frankly got no idea what's going on at any given time. And I think the very rise of Xi Jinping, where you may take the positive stance that this is a sort of strong, powerful leader consolidating power and sort of can push through reform, you say, well, frankly, that means we had everything wrong about Chinese politics before. Because before he came into power, the consensus across the board, there was just no about. China was now a consensus-driven leadership by committee type of model. There was not going to be a strong man again. There was not going to be a strong political leader. So basically, we've either completely misunderstood things previously to allow Xi Jinping to come into place, or we were just simply ignorant of it, the fact in the first place. I think the mistake is that to almost give too much credibility to Chinese political institutions, that we've seen certain things happen over handovers since Tiananmen Square, so over the past 20 years, and we have assumed that these are institutionalized processes of smooth transfer of power. And frankly, they weren't. There was a lot more fighting behind the scenes. Bo Xilai is an obvious example like that. 2011, people are talking about Bo Xilai as 2010, as a possible next leader. Very few people saw the Bo Xilai issue coming. Those that did were roundly abused to be said, no, this could never happen in China. There's no sort of coup coming. There's nothing like this. And clearly the behind-the-scenes machinations were very active. So while I may say the politics is important, I'm also going to admit, somewhat contradictory as well, I have no idea what's going on in the politics half the time. And I think it's Xi Jinping, by the analysis of 5 years ago, should never have come to power. His consolidation of so many titles, how much power he's got, there's probably some debate, but certainly of titles, again, should never have happened either. That was not supposed to have been able to happen in this consensus model. And so you think, but even with that power, what does he really want? Because, and I come back to even why we started writing. Even that phrase reformer in China, he's a reformist, he's a reformer. I have no idea what that means in the Chinese sense. I do, but what I tell you, it doesn't mean what we think it means in a Western sense. And again, it's not just like the Chinese have their own way of doing things, but these names, these labels have such different meanings. And so when Xi Jinping wants reform in the sense that he wants things to run better, he wants the Communist Party to run better, he wants state-owned enterprises to be more efficient, he wants less dependency, certainly on the US dollar, certainly on the States, he wants less dependency on foreigners, he doesn't want Western ideas seeping into Chinese education and sort of things like that. So if that's reform, it's a self-sufficiency that he wants. But the idea that he wants to embrace free markets in any way, or even embrace the market as a decisive factor, which his own documents have said, I think is highly misleading. This is a person who wants it. Reform so often in the West is understood to be economic reform, of the government pulling back, of the markets taking a bigger hold, of market forces taking a bigger hold, of bankruptcy coming to the fore. Hey, your business is bankrupt. We're going to bankrupt your business. We're going to close this. We're going to sell these assets. That's not what the Chinese mean by reform. They're talking about administrative reform. They don't necessarily want to face all those arbitrary things. And so when you look at what happens in the markets, I think this is the classic. It's, let's go back. So we're at the end of 2016. Let's go back 10, 11 months, and we saw this, the renminbi collapsing. It moved a few percent, if that. It's hardly a collapse. The renminbi in the past 18 months has moved 10%. I think the yen did it in about 6 weeks recently, and the sterling did it in about 6 hours. So, this is hardly major market moves. But of course, for China, these are major market moves. And I think if you go back to the beginning of the year, January, February, when the currency started to get very weak, the panic in Beijing simply wasn't lower currency levels. It wasn't that the moves had been so significant. Okay, they're all well within any bands they themselves have set. They're well within historic ranges. But what they didn't like was they didn't like the market pulling them. And this is, I think, is the real fear. Because if you start having a market fall, as the stock market did in 2015, as the currency started to do then later in the year and the beginning of this year, as anyone who spent any time in market knows, that takes on a dynamic of its own that forces people to come out and do something. They have to act because it'll be even worse tomorrow. And that sort of unexpected, or that unknown reaction, that being forced by the market to do something, is what really worries the Chinese. Now we're nearly touching 7. We've already had a PBOC fixing of 6.95 in the past few weeks. And so in that sense, it's not simply the lower level which is the worry, but it's the unexpected and the volatile nature of markets that forces people to do things. Chinese leaders don't like to be forced to do anything. They certainly like to give the impression they're very much in control. And they themselves, this idea, I think one of the things that sticks, there's a number of things from, let's say, the past 20 or 30 years in China that stick, or in Asia that stick with the Chinese leaders. 1997, the Asian financial crash really stuck with them. I think they looked at Hong Kong, they looked at Thailand, and these sort of headlines, whether they're true or not, that a New York hedge fund manager presses a button and $1 billion leaves Thailand, and Thailand is decimated and people are unemployed and factories are closing. Very simple, very tabloid type of headline, but that's exactly the type of thing the Chinese government are desperate to avoid. And so that volatility of markets, the unexpected nature of markets, is something they recoil against. So where does that leave the currency? It's going to get weaker. I don't think that's really any surprise. But do I see a great devaluation? No, I don't, because I don't see how that plays into the government's favor. This idea of taking sort of tough medicine early, getting the worst over with, I think sadly that's past. I think that's the difficulty, that time has now passed for them. I think if they were to do that, and again, we know markets overshoot, okay? And again, if you were to say, if the currency is overvalued, and I don't particularly care if it's overvalued or undervalued, I just know it's not market driven, and I'm pretty big on market driven forces. So in that sense, I don't know what the right level is, but should you devalue 5%? Was 5 enough? Well, 4.9. Well, fine, 5.1. Be a number snob, go for 9.9. Is it 10%, 11%, 12%? I don't know, is it 15%? Maybe we should go to 20%. Maybe we should go to 8.5. I don't know, what's enough? What's enough, and what are you actually trying to signal there? Because certainly if you were to go back to 8.3, where we were for the best part of 15 years or so, then that sends a very bad signal, of course. That basically almost wipes out the past 11 years of currency movements and currency strength. And then you think, oh my God, China is like, it's really going back to some almost prehistoric economic environment, as it were. So I don't see them doing that because I think it sends such a destabilizing signal. I think instead they're going to waste more reserves, waste a lot of time, a lot of effort by this sort of slow depreciation. And it'll come in fits and starts. It's never going to be a straight line, but it's going to be sort of fits and starts on the way down. The argument that somehow they're wasting reserves, the Communist Party has never been efficient. It's efficacy, not efficiency. They achieve what their goal is. You know, they've got lots of people, their entire history is about wasting resources to achieve some arbitrary goal they set on one day that the next day was no longer important. My God, this was a country that sent out school children to clap all day to ensure that sparrows couldn't land so they would die, thinking that that would improve, you know, public health in Beijing. So in that sense, the idea that somehow they're wasting resources, I don't think that matters to them, because what they're focused on is maintaining control and not necessarily being exposed to that market volatility and that whiplash, because goodness knows where that could take you. Because if you lose confidence in the government, and again, this is what underpins so much of what goes on in China. Okay, you can talk that, oh yes, they're rebalancing, the growth rate's coming down. You could argue their debt's not too high, but everyone basically falls back on, but the government's in control. They're still in control of all those levers, whether it's, you know, fiscally, whether it's socially, whether it's the internet, information flow, whatever. And that if you have that sort of shock to the system, then I think that becomes highly destabilizing. When you're talking about politics and risks of China in the coming years, I think the risks are ultimately political, not actually economic. Because the politics, and again, how can anyone be sitting here at the end of 2016 thinking ahead to next year without thinking about Donald Trump? Because the rhetoric there, that relationship, which has always been a bit of a love and hate relationship going back for centuries, clearly will change. It's already started to change. For better or for worse, we'll find out. I think, though, what's very clear is that Trump is clearly going to take a much tougher stand on China. He's certainly talking tougher on China. What his stand is on China, when he's in power, and we've been through 6 months, a year, then I'll tell you what it is, because frankly, I have no idea what it's going to be now. But you know he's going to certainly try and be tougher on China. I think there are a number of things that are worrying about that, though. Not that being tougher on China is a bad thing, because I think if my complaint, and I've often been called about, I've been bearish on China, and I think that's a dreadful term. I think bulls and bears exist in the stock market. I think they're dreadful terms to try and talk about countries or bigger picture things. I will always see myself as a realist in China because I've spent a long time there. I've worked at Chinese companies, and I'm very realistic about the real limitations of China. Often China, because of its sheer size of population, of financial reserves, or whatever it may be, seems to be this behemoth which seems unstoppable. And yet the reality of dealing with Chinese companies, and often individual Chinese, or even the Chinese government, is much more fractious and nowhere near as successful as the big picture would be. And so when I've been sort of negative and critical on China, it's because I think one of the first things is to start talking truthfully to China and about your relationship with it. So in that sense, tough talking does no harm. I think because much of what China, I think the frustration that people have often with China is that China doesn't even live up to its own promises of whether it be reform, of market opening, market access, and things like that. So in that sense, there's lots of reasons to be tougher with China. And that's the good side, if you like, of Trump. Although, is that what he's going to do? I don't know. What worries me more with Trump is that there seems to be he's fighting the wrong battle. He's fighting a battle from a decade ago or from 2 decades ago. That somehow that the very basic model of American jobs move somehow direct from America straight to China, and that if only we are tough on China and put tariffs on Chinese goods, that those jobs will come back. Well, if that simplistic picture was ever true, it's certainly not true now, and simply putting tariffs on Chinese goods doesn't solve that problem. So I'm worried that and certainly his economic advisor, Navarro, whether his economics even holds up, many economists would argue, but certainly his China policy doesn't necessarily seem to hold up. He seems to paint China as the great evil in the world that's responsible for all ills, and certainly China has a role to play in many of those ills, and certainly Chinese policy has certainly contributed to many of those apparent ills, and there's things we should be tough on China about. But simply this rather belligerent attitude I don't think it's very conducive. Not that I'm annoyed or worried about upsetting the Chinese. That's almost an argument for saying those things if you're just upsetting the Chinese Communist Party. I have no problems with that at all. But you're not necessarily going to achieve the goals you want. And I think that's what what Trump's wanting needs wins. And he sort of needs wins against China. The approach he's taking, I'm not convinced he's going to be able to do that. What you have seen as well, of course, and this plays into Trump's sort of worldview and others, is that China, of course, themselves have become more and more belligerent over the past 5 years or so. And this has certainly increased under Xi Jinping. It's partly been to support their own economy. This has come across a wide range of issues. One, of course, is sort of economic and the greater focus on domestic production of certain goods, of restricting fair competition from foreign companies or forcing foreign companies to onsource certain activities into China, particularly in the sort of technology space, which is obviously very worrying given the tight control that China has over technology, etc. So there's those sorts of aspects. But you've also seen it being nationalistically much more belligerent. Obviously, you've seen that in the East China Sea. You've seen that in the South China Sea. And it's China as the bully, China as the big country, and you're a small country, get used to it type of model, which ultimately I think will backfire on China. And yes, we all know China is a big country. We all know that all the countries in Asia are very dependent on it. Economically, they're very linked with it. But China is, I'm not quite sure what it thinks it's setting itself up for, because it has no friends. I was once giving a talk in Europe and I said that China has no friends. And a lady from the Chinese embassy came up afterward and said, but that's not true, we do have friends. And I said, well, name one. We have a friendship treaty with Pakistan. I thought, anyone else? And she said, Singapore. I said, sorry, is that a question or a statement? And so China doesn't have friends. It goes almost out of its way to alienate countries in the region, certainly countries it should be cooperating with, countries that have large Chinese diaspora as well, so have natural affinities with them, but they seem to be unable to build an inclusive type of model, and it becomes a very Han-chauvinistic model. And this, I think, is ultimately an underlying weakness in the politics in China. So you look at those domestic sort of political issues, that domestic inability to build friendships and alliances, even within Asia, its natural community. You then bring into this Trump, who has almost alienate everybody he meets. And then you think this is clearly going to be volatile for the coming years. Being tougher on China, not a problem. Is Trump the person to do it? I really have to doubt, because I can't see, he's a man who revels in his own ignorance and seems to have surrounded himself with people who, again, are not necessarily think that simple solution to complex problems are the way forward. And I don't think that's necessarily is going to be, it may be good for markets, there'll certainly be volatility, as many of my friends would say, but it's not necessarily going to be good outcomes, I think. What is interesting, and obviously I work in finance and I read about the Chinese financial system, but I don't manage money. I thankfully don't need to give people advice to what to invest in China, although my default answer is I'm sure there's lots of good business to invest in China. But I think what's interesting, or when I think about China, how I think about it differently from others, or many of the people who would be my peers or the readers of Red Capitalism, that I came to China because I was interested in China. I didn't come to China for the market because it was a big market, there was a big stock market, or there was business opportunities. And so I've often thought that's given me some advantage, perhaps, of trying to understand China, or trying to just maybe just accept some of the frustrations there. And I think of this particularly over the past, since that since the global financial crisis. So you look at over that long 8 years, those 2 Olympic cycles as I talk about, and you think about, lots of people have done lots of work on debts and whatever, and this growing network of debt and all these nodes, and look at these empty apartment buildings and whatever. And I say, yes, that's true, that's very nice. And then they automatically then sort of jump through onto, well, this must stop, that this must come to an end, that this default beckons or whatever. And I think that's sort of true. Of course it's true, and ultimately there is a price to be paid. But I think in China, 2 of the things that I always think about China, and this is because I've been interested in China long before the economics of it, as it were, is that China is the land of the absurd and the arbitrary. And I think unless you understand or appreciate that China is this absurd country in some ways that's struggling to become modern, then you come too quickly to these conclusions. Oh, the bank's accounting's all, hocus pocus. The bank must therefore go bust. I'm shorting the banks. Well, why would you do that? There's no evidence the banks are going to go to zero. There's no short sell report that's going to expose it all. And so you're almost looking for the wrong sort of outcome. And I think it's understanding this of the absurdity and the arbitrariness of it, that you simply, when you do your China analysis, you're left with a lot of unanswered questions. You are left with, almost in dead ends. And you think, but surely the next step means. And say, well, it does. I'm not saying it doesn't, but who's going to take that next step? Who's going to force the bankruptcy? Who's going to ask the difficult question? Everyone else, in Chinese, when you raise these types of points, Chinese will say to you, semi-apologetically, but also in earnestness about just apologizing, 中国是这样子. In China, it's like this. And you think, not again. And it's true. But this sadly is, and I think if you're an investor at all sorts of levels, not just whether you're picking stocks or whether you're doing real business, and clearly people have made a lot of money in China, so it's not as if it's just a complete fiction or fraud. But you simply end up with a lot of these, like I say, loose ends and unfinished stories that often sort of fizzle out in some way. And there doesn't come to a clean bankruptcy or something. But what you find is that the loss has been socialized in some ways, that someone else bailed somebody else out or they borrowed from here, and the story morphs into something else. And that's very difficult, I think, to explain a lot of the time. It's a bit like the politics we talked about, the politics and the economics being tied up. But it's often very difficult if you focus just on the numbers. Yes, the numbers can expose a lot of sort of malfeasance or wrongdoing, but that's only part of the story. Because there's also then another parallel track of almost like back deals, as it were, or state support or local support that carries on in the background that allows things to continue, and everyone sort of plays along with the game. It's in nobody's interest to sort of, to pull the rug away in that sense. So I think once you understand that about China, I think, does it make you a better investor? Maybe. May make you a bit less frustrated, because again, people I even though I'm in the sort of financial markets, as author, I sort of consult with various people on all sorts of China topics. And I remember somebody came, they were doing a big project, a big property deal with a big blue chip Chinese name. And I was advising him over a glass of wine, as you do. And he said something like, so what do you think of, my Chinese partner? And I said, well, the first thing you need to understand is that all Chinese partners are bad partners. And he said, what do you mean? I said, well, it's not necessarily they're out to defraud you, but they're almost certainly not what you think they are. And so even though this is a blue chip name, and they're saying they're going to invest X hundreds of millions of dollars with your property project, do they have approval to bring the money out of the country? Well, they're a big Chinese name. I said, do they have approval to bring? We've not asked, but surely they'll be able to get it. Why would they be able to get it? Are you watching the news? Do you know how difficult it's getting money out of the country? Have they got approval to do the project in the first place? You mean they may not? Well, why would they? You cannot assume that. So it's not that they're necessarily lying to you. They may be very earnest about doing this project. They may have the money in China, but you don't need the money in China, you need it somewhere else. And so I think understanding the framework in which China operates, partly you could argue is good deal due diligence, but it's also understanding that this of how China operates, how entities, how individuals operate, that will often speak well beyond their capabilities, because they'll think something will turn up, that we'll figure out a way to do it. And often, of course, they won't figure out a way to do it, which makes it very frustrating, because you think, I'm dealing with a blue chip Chinese name here. And then actually they're just as beholden to the arbitrary regulations of the government as anyone else.